Hello, hello, and welcome back to another community conversation with myself. My name is Jackie Jones. I am CEO of One Degree Marketing. I am also Community Engagement Manager with Create Birmingham. You can see that in the corner. I'm super excited for this community conversation because the person that we have for you today is one of my favorite people on the planet. And not only because she is extremely knowledgeable and extremely great at her job, but also because she's just a wonderful human. And she's really pretty too, but that's last, right? All the other stuff matters so much. But I will give her the opportunity to introduce herself in just a moment. But I do want to remind you of what the purpose of all of this is. The entire purpose is so that we usually have these conversations in communities, like in libraries, things of that nature, to bring information or just open conversation to people. But as we have kind of battled with coronavirus and all of the craziness that has happened, where a lot of businesses are taking on some hits and some changes and some laws and some rules and all that kind of thing, we have decided to bring this into a digital space and try to address the things that keep coming up with our global community. So we're on Facebook Live and we're here, and later on YouTube, there will be a replay. And so now, without further ado, the real reason that you're here to talk about some financial forensics is with Miss Darlene Wilson. So Miss Darlene, if you would please introduce yourself to the world here.
Hi, everyone. So happy you all are joining us this afternoon. So I will tell you first off, I'm a really big fan of Create Birmingham and all that they do for our community, and especially for our small businesses in our community. So kudos to them for always making our businesses their priority. So I've seen a lot of their work out there over this time during COVID, lots of information being shared. And so I hope you all are able to manage as best as you possibly can. So I'm Darlene Wilson again. I am the Managing Principal, Relay Accounting Management. I have been in this business for now 15 years. So we service businesses that do not have accounting departments on site. And even if you do have maybe an internal bookkeeper, we also can manage some of your internal controls to help you better put your processes in place for your businesses. So we serve about 10 states now, and it's certainly been our pleasure to really engage in the business community. I enjoy so much getting to see businesses kind of start their journey from, most of them, typically from the very beginning. So it's exciting to see you all continue to grow out there. I tell people I was once one day old in business, and that's everybody's starting point, right? So this is me, and I'm all things business, economic, and community development. It's what I do every day. It's what I enjoy, and it's certainly my passion.
We are so glad to have you. And though Darlene didn't mention this, because she plays a role in so many aspects that affect small businesses, she is the perfect person to talk to about financial things, because there's the accounting side of it, but also as a person who is constantly dealing with whether it's laws or organizations or just programs and policies, loans that affect especially the city of Birmingham. So I know people are outside of Birmingham watching, but a lot of just influence here in Birmingham. And so this makes you the perfect person to talk to. And so let's jump right into it. Now, of course, if you've been here before, you know the rules. If you have questions, there is a Q&A here in the Zoom. If you would like to use it, feel free. If you're on Facebook and you are watching with us, feel free to drop those in the comments. And I am watching here. I will try my best to monitor. But if you have questions, please feel free to ask. But of course, I will get this thing jumped off. Now, Ms. Darlene, you mentioned that everyone was once one day old. I too, in business, was once one day old. And so as we get into, because currently, because the purpose of this or the focus of this is around major change, but as you stated, you have to start somewhere. So my first question to you is, what are the fundamental accounting needs that pretty much every business has?
So you have to have a foundation, to businesses. And I stress this a lot too when I'm coaching and consulting and meeting with clients. So when I mention one day all, I want to say one day all starts when you have the concept in your mind. The day that you say, I think I want to own a business. That is really when business starts, right? It doesn't start when you see the first customer or when you see the first client. So it's in its concept phase that you begin to build that foundation around you. I always use the analogy that a house is not built without a foundation. If it is built without a foundation, it doesn't stand for very long. And that's the same thing with businesses. And so a foundation that includes your financial foundation is critical to the ongoing success of your business. And what I stress to people, it's not enough for you to just say, I need money to operate this business, right? You have to know what you're going to do with the money to operate the business. And so therefore, creating business plans, any form of a budget. And I want to stress primarily to you all that a startup costs are very different from operating costs. So really and truly, initially, you have to have both budgets in place. You need startup budget and your startup budget, and you also need an operating budget. And don't reinvent the wheel. I mean, unless you're just doing something that's totally new to the industry that's never been done before. But I tell you, financially, it's all been done before. So therefore, know what are some common practices that are going to be necessary for you to understand your business and the financial function of your business.
I think that's such a good call out about the fact not to reinvent the wheel, because I think that we often do feel like I can't ask, I can't look, my business is different, or what I'm doing is different, when the truth is that likely someone somewhere is doing something at least close enough for you to be able to, research at least what they've done, or maybe find a mentor, or talk to someone about their journey, which is way easier than trying to build it from scratch if you don't really have to. So I think that's really, really important to point out. Now, just so that we have, because I try to, in this conversation, I really wanted to have kind of a everyone knows the same language. So I'm asking some basic questions about accounting first, because I don't want us to start throwing stuff around like P&L and, and people are like, is that like S&L or what? So I just want to make sure we all understand what we're talking about. So can you just give us the basic brief? What is a P&L, profit and loss? Just in case anybody's wondering, I know that one. Just those basic financials, because people always say, what do your financials look like? We need your financials. Financials is like the word to say, right? Air quote. I'm sure Meg really enjoyed those air quotes. But what are those basic financials, and what do they tell a business about themselves?
So when you talk about, I think people, when we talk about financial statements, there's a process that happens before financial statements can be produced. And so that process is really bookkeeping. So someone has to be making some entries, right, related to the income, expenses, assets, and liabilities of your business. So profit and loss statement, we'll start there. You're here referred to as profit and loss, P&L. You also, the latest term, which is statement of income. And you will hear that.
I learned
in fact, they do not even in college, in the classroom, call it a P&L statement any longer.
So I just told my age and didn't even know?
Yeah. And I always tell mine because I still call it a P&L. But a P&L is probably people use that financial statement the most. I won't say that it is the most important financial statement, but it's used the most. And a P&L simply gives you a month-end snapshot of revenue versus expenses. That's what it is. It could be as little information as you want, and it can be as detailed of information as you want. I stress to everyone, the more details you have on your P&L, the more categories, chart of accounts is what we call those. The more detailed your chart of accounts are, that snapshot gives you a lot more information at month end. So, but it does not mean that even though you had a net positive income for the month, that you had positive cash flow. So that's going to take me into the cash flow statement, which now you all may be hearing people reference that financial statement a good bit. Because what we know is a cash flow statement really speaks to the true health and welfare of your business day in and day out. Because what a cash flow statement says is, how does the money flow into this business and how does it flow out of the business? So what we're looking for is trends of, is money coming in first before money is going out? Or is money going out in some kind of way you're like a little rabbit chasing that with your deposits to catch up, right? So that's what a cash flow statement is. And that tells us, again, the flow of your income in and out of your business. How does the income come in? How does the expenses go out, right? So it's a very, very important statement. And if you really are into doing any sort of financial planning, budget analysis, things like that, I ask that you all to focus a lot on your cash flow statement, because you can adjust some things on your cash flow statement. And I want to and what I mean by adjust some things, I mean from the perspective of, if you have a bill that is due, and that bill is due, and it really comes in before your revenues, you begin to receive your revenues, you may really want to consider, can there be an adjustment in when this bill is due, right? Can I contact Alabama Power or your power company, your gas company, your water company, your vendors who may have a net 15, a net 30, whatever it may be, and get those dates, those due dates pushed into to a point in your month that they come after your cash comes in. That's how you adjust your cash flow. That's how you get to positive cash flow in a business. So that's why the cash flow statement is important. So don't just look at the P&L and say, "Ooh, yes, month in, we had positive," you know.
I'm like, man, that number looks good at the bottom.
Right. That's really not what that means. It may have cost you money for you to have a positive cash flow at month end. And what I mean by cost you money, that could be interest that you paid on something that you could have avoided. It may be even a bank fee, right? I may have had to pay something knowing that I was going to get an insufficient funds charge for that, but to savor and really, really garner my relationships with my vendors out there, I paid the bill so that I could look good to them, but my cash wasn't coming in prior to that bill being due. So there's some things you can help yourself with.
And so that's where having the chart of accounts matters, so that you can tell what you spend it on, right?
That's right.
Bank
Absolutely.
Fee, the PayPal processing fee. This was, I'm
yes.
talking about my own life, y'all. This was a Square processing
yes.
fee. Because they vary. And sometimes I think that, as a person who started off with it just being me, like before there were other people helping me, it was always hard for me before I got some of the best accountants at Ram Firm to help me just understand what I just needed to see. And I think that a lot of times, which will take me to my next question, a lot of times people feel like, especially a lot of our creatives, a lot of people who are in creative industries, they feel like they don't have enough stuff happening in their account, or they don't have enough clients to warrant, keeping up with their transactions or having these types of financials. But even if you only have 3 transactions, if you don't know what 3 they are, you still don't have a clue. So what exactly would you say, at what point do you feel like people should begin to track these types of things? Okay.
First day in business. Again, the first day in business is concept phase. So this is how we create our balance sheet. And we didn't talk about that. Concept phase really goes to your balance sheet. Those are your initial investments, right, in your business. So you're wanting to track what your capital investment was in your business initially, any type of goods that you needed to purchase to operate your business, be it, computers, printers. It could also be refrigerators, stoves, whatever it is that you need to start that business, right? So there are some things, what we call on the balance sheet, are your assets and your liabilities. So your assets is what begins to build the value in your business. And so therefore you want to be able to track those things from the very beginning, because it's also where you take depreciation and amortization for tax purposes. And there, it also creates that historical information that you need about your business from day one. Who do you owe? How much do you owe to them? You know, my credit cards, my loans, whatever they may be in terms of your liabilities. It could be investors who invested in your company, but you have to be tracking that. And so tracking of your expenses, because that's exactly what it is from the very beginning. You've not made one dime in terms of revenue. You've made a capital contribution, whether that capital contribution is your own funds, it's money that was loaned to you, you bootstrapped it through credit cards or whatever it is that you used. Initially, you have expenses that need to be tracked from day one, because from there is how you determine what we call your burn rate. How long can I go before I either break even or go broke or close down, right? That's what you need to know. And you need to know that from the very beginning. So
I wonder, because, as we think about things like right now, loan is like, it used to be a dirty word in some circles to want to get a loan. But now it's like most people feel like they will not survive if they don't get some version of a loan, because grants are very hard to come by. And money only people only giving out so much money that they don't want back, right? So a lot of people have to consider loans. So what exactly, are there any red flags that you feel like maybe people who look at financial statements see on like a P&L or a balance sheet? Like, what are some of the red flags that might make someone who's giving a loan say, something's off here, or I have questions about this? Is there anything that you feel like you've seen happen kind of repeatedly where people are maybe making some mistakes or not presenting something correctly?
So two things that people don't do. They don't track their assets from the very beginning. And so that hurts your business, because you're not giving your business any value from the very beginning of doing business. And so, your assets. So like for me, when I started my business, I purchased a building, right? So the building itself is an asset, although there was a loan on the building, that part was a liability, right? So when you're going for loans, that's what they're looking for. They're looking for your disciplines around the use of your funds and what you're using those funds for. And it's not so much that I have these loans and I have all this liability for the business, but if it's necessary and it's ordinary for the operation of your business, then that is not going to be something that will hold you back from doing business. What really you have to be mindful of, and what they're always looking for, is your discipline around your cash value in your business. Are you going to be one of those people that's going to take all the cash out of your business month in and day out? You get to net positive at the end of the month and you got $5,000 in it, and you take out $4,550 and put it in your own bank account. Your business has to build cash value as well, because they need to understand, when you're going to get a loan, your ability to repay that debt to them, right? That's what they're looking for. But I'm all for loans. I think that they're very helpful. I think if they're strategically used and in the form in which they're to be used for, if there's a plan around the purpose of the loan, then I say that the loan, using someone else's money, nothing is wrong with that. Remember, interest expense, all those things is a deductible expense, dollar for dollar to the business. And therefore, using someone else's cash versus your own cash and depleting your cash out of your business, nothing is wrong with that. Again, a loan needs to have a plan. And with that plan, it needs to say how you're going to bring about increased revenue because of this loan.
Yeah,
that's really what you're doing.
It sounds so much more clear when you say it than it did in my accounting 101 class. Just because, I think, and again, there's a fear just in general around borrowing money. And I think that fear is, just a human fear. And I think for a lot of small, like small businesses, they're just genuinely afraid that they won't be able to pay it back, or, what's going to happen if, and that kind of thing. And so I know that there is a mental block around loans, but again, given current times, sometimes you just have to accept that, it is what it is. I have to choose to survive or not survive. And like you said, you have to have some version of a plan, which right now has been hard for a lot of people, with coronavirus stuff, and people don't know when stuff is gonna open, when it's gonna, when can I have full capacity in my building as opposed to half capacity and stuff like that. Do you think that, well, let me back up a step first. Have you found that there have been any holes in people's accounting as they have sought help for like coronavirus? Like, what have been maybe the more common issues with people who were like trying to get PPP loans or trying to get EIDL loans, which is the emergency something disaster loan? Okay, EIDL, EIDL.
EIDL, economic injury disaster loan.
Economic injury disaster loan. Listen, y'all, not my wheelhouse. Y'all got Google. Don't listen to me. Listen to Darlene. But what have been some of those kind of common, pitfalls, basically, that people have maybe run into that could be avoidable?
Okay, so I want to just backtrack just a little bit on a statement that you said, just some of these fears, innate fear, using that term or whatever. So I'm going to be very candid with you all. That stems from not having a plan that you believe in. If you have a plan that you have clearly thought through into how that plan can be executed and turned into dollars and cents for your business, then you do not really tend to operate in fear, okay? Because you have a plan. And so I encourage you all to have a plan so that you're not operating in fear, because I will tell you, fear is your limitation to your growth. And so it's a growth stunner. Automatically, it sets you behind because you are operating in a space that you feel you have no clarity in. And so you got to get clarity around that. Okay.
Good.
So speaking in terms of what has happened as a result of your fear, so I'm going to just go ahead on and put it all the way out there. PPP, EIDL, and things like that have not been as attainable as we have liked for it to be for our small businesses. And honestly, for who it was truly designed for was us. PPP, EIDL, all of these were truly designed for us. You're never too small. Again, that's why I say implementing good practices, policies, and procedures is critical from day one, so that you never really get caught in a situation like this and you're not prepared. So I will tell you that that's exactly what happened. And you cannot get prepared when you have a timeline that says money is going to run out. Right? Because the only people who got the money initially were the people who were ready the day before, not even the day of.
Right.
They already had everything that they needed on day one. And really understanding your business. I think I was more concerned around the PPP process, because what I began to realize in assisting business owners and many other people out there across the US with PPP applications is that so many of our business owners are operating in a space that they don't even know the terminology that's related to what's being requested of them. Things like, your 941s and your 940s, and and people are like, I don't know what that is. Well, you would know exactly what that is if you had payroll, right? Because that's exactly what PPP was. It was based on payroll, okay? And then there's this, I know everyone got in probably a little tizzy about the idea of your independent contractors, people who receive Form 1099s from your entities. But I cannot stress enough that those are not your employees. Okay, and if you think that they are your employees, we may need to go back to the drawing board and look at that 12-step checklist that the IRS provides to determine do you have employees versus independent contractors? And then you need to shift from issuing 1099s to issuing W-2s at year end. So that was a little bit of a setback for a lot of our small business owners. Then moving into EIDL, EIDL is a little bit more complicated, right? EIDL is an SBA loan. SBA loans require a lot more documentation. It definitely was a little bit more red tape to qualify for the EIDL. And simply put, a lot of our small businesses were just not simply prepared for that. Tax returns are not up to date. No current financial statements to support the activity of the business today. Just some of the information that was going to be required. Again, just a lot of fumbling to try to get prepared for something that you have to be prepared for every month. There's no getting prepared for crises, as we can see. And I hope that now our small business owners will begin to really think about the importance of their back office. Really, really begin to understand why that is necessary, and know that that is simply a cost to doing business. If you cannot do it yourself, it is in your best interest to hire someone who can either train you to do it or will do it for you. And that is, again, a cost of doing business. And I hate to see so many businesses that have been left out of PPP and EIDL for these reasons.
Yeah, it's been sad to just kind of, because you can see and sense the despair. It's like, why aren't they helping us? And I think that, as a small business owner myself, who has independent contractors, but I definitely knew that when they started saying payroll, I was like, that does not apply to me because I am not paying anybody's payroll right now. But I think that it was very heartbreaking, honestly, to see so many people feel like they were left out when, like you said, a lot of it was designed to help small businesses. But I think that the argument that a lot of people would have is that, well, we can't afford to have our accountant ready like that, that kind of thing. So I'm glad that you bring up the point that if you can't afford to have it outsourced every month, you get some training, learn the things that you can learn, because you're either going to spend time or money. That's just the bottom line in all things in business. You're either spending time or you're spending money. But that leads me to another question, which is, if I can't afford to outsource bookkeeping, and for some people at some point in my life, I was like, that is an unnecessary cost for me because I have 2 transactions a month. I can keep that book myself. But if I'm in that place where I feel like my business is not grown to that point, like I see the value, but I'm not at that point yet, or it's not in my budget to retain someone, what would you say are the things that I should begin to understand or know, but also how often should I meet with an accountant? Because just because you don't pay someone monthly doesn't mean you can't necessarily have an accountant. So how often should people check in with someone?
So that's very true. I understand that there are budget constraints as it relates to starting businesses and kind of what that looks like for the operation of your business. And if that's something that's even affordable for you, what I'm saying is that it cannot be excused. So,
Okay.
so having an accountant, so what I suggest is that you have to, when we talk about the startup costs, an accountant is a part of your startup costs. So consulting with someone on the front end, you need to decide what that budget is going to look like and do that. From the very start of your business, you should consult with someone. Just like you would consult with an attorney, those are critical legs to your stool. I'm just going to say that. They are part of that stool that helps that business to stand up from day one. So consulting with someone, they will give you guidance. Accountants out there are not going to say, I'm not going to give you a guide sheet, help you to understand what's going to be necessary from a financial perspective and an accounting perspective for your business. If you can be trained to do books yourself. You can, QuickBooks Pro advisors are out there everywhere. You can get training, especially for those that are smaller in nature and don't have a lot of restraints on how their books need to be maintained. That's an easy fix for yourself, but it's not easy if you choose not to do it. Okay. So remember that what you decide to do for yourself becomes a part of your day-to-day work as well. Doesn't mean you have to do bookkeeping every day, but you have to decide, do I do this twice a month? Do I do this once a month? What does this look like? Because again, you will find yourself 3 months, 4 months, 5 months behind and you haven't made any entries. And suppose there's a wonderful grant that comes out and you got 48 hours to get the application in, right?
This is what is
Think
happening.
about those things. And this is what is happening, right? And so don't say, I can't afford it, I'm going to do it myself, and you don't do it yourself. You have to make the time to do it yourself because, again, it is an important tool to your business. Always have somebody in your back pocket who you can say, if I need some assistance, if I need some help, if I find myself in a jam, we offer those services at our firm. If you find yourself in a jam, you really need some sorting out of some transactions in your QuickBooks, please get that sooner than later. Do not wait until year end or when it's time for tax season to get all of your entries corrected that you made wrong throughout the year. Two things happen. First and foremost, you really kind of begin to forget some details about those transactions, right? And the second thing happens is
because I did
yeah,
that.
and then the second that happens,
it is
right?
So
and then the
remember.
Second thing, absolutely. And the second thing that happens is that it costs you more money when you do it at year end. Whereas, you know, if you're working with a budget, you know, you want to do and make those calls and have that firm lined up for when you have those kind of questions. But anytime, I just encourage you all, before you purchase vehicles that you want to use for business purposes, before you go into leases and those, any type of large contractual type agreements and things, I really ask that you consult with an accountant first. Understand what the tax liabilities, implications of those may be. What could be some of the tax advantages of that, right? You want to do that prior to. It's so hard for us to really consult with you and give you any type of advice once you've already made the purchase and already made the choice. You know, now we get what we get. Right. And it just is what it is, right? So you should have somebody.
Yeah.
And it's not enough for you to see that person once a year. So every quarter, when you, maybe a year in or two in, quarterly is good.
Even though, because like you said, once a year, if once a year is not at tax time, because, you know, tax time is tax time, you know, and I think that the accounting industry is like, unless this is tax preparation, it's going to take like a whole lift for us to try to do some other things because tax time can get to be a little crazy. And so if it's like, okay, all I can really afford is tax time, preparation, and like some consultation there, but then like 6 months, the halfway mark of, hey, okay, here's where we are. This is what we talked about at tax time, the adjustments that I needed to make and that kind of thing. Even that can be valuable. And I know that for, like I said, a lot of creators and people who are, you know, independent contractors themselves who are, you know, our solopreneurs are very small. I think it makes sense to say, hey, I'm just going to come visit you every 6 months, you know, like a dentist.
Absolutely.
You know, I'm just going to come back and check on the health of my business.
Yeah, and you definitely should see us in the last quarter of the year. The last quarter of the year is a telltale sign for your business. We can give you a lot of guidance in the last quarter of your year, even down to what, you know, your estimated tax liability is going to be as of March 15th or April the 15th, depending on, you know, what type of entity you are. And that still gives you time to plan for that tax liability, as opposed to coming in February and March and you got a $7, $8, $10, $20,000 tax liability. And you're like, what? You know, but if you know that in October and November and you have another 4 or 5 months to plan for that, I promise you it makes a huge difference in your planning for year end and your planning for the coming year.
Everybody get a pen out and write down schedule accounting consultation in the last quarter, because seriously, like I clearly like am missing the opportunity to be prepared for the, say how much now? Because that's me at tax time. Is like, right. Sorry, did you put the comma in the wrong place?
Right.
it's not happening to me. Like it can't be happening to me. And granted, you should be thinking about that throughout the year, but I think
Is that a period right there? And
right,
just
like
you know,
your period, your pen fell a little bit. That's a period, right?
period.
But I think, sometimes, and I know that one of the things that I went through was that as I went from kind of solopreneur to needing help and growing, sometimes you can grow quicker than you realize.
Oh yeah.
And you look back and you're like, and it's not until tax time that you really realize just how official you have become. You're like, oh, I'm a business. Okay. Okay. And that can be stressful for some people and even disheartening, because they're like, oh, how am I going to pay this and keep going? And just as soon as I felt like I was going, now this is pulling me back. And it's like, no, like you said, it's the cost of doing business. But what are we doing, everybody? We are scheduling accounting consultations in the last quarter of the year to be better prepared for that.
We do want to see you all. We want to see you in that last quarter because we really feel like we can get you either over that edge, help you meet that goal that you are still probably lagging to some degree on for that final quarter, or help you get ready to plan for that coming year so that you're really ready to go financially in that respect.
That was a good point too, because having that conversation can make you know whether you need to push the gas to the floor and be like, right. Okay, look, I'm going to owe $5,000. So I need y'all to buy all these things that I am making so that I can pay my tax.
That's right.
I am not going to be deep discounting because I need all my money.
That's right.
So, and that's, as a service provider myself, as a marketer, those kinds of things matter to how you price, to, what you're selling, how you're, all of that play is hand in hand. And that's something that's very hard for people to understand, but you have to know what your expenses are to determine how much these things will cost when you, and I know sometimes we feel like, oh, I don't, I've only been in business for so long, I can't charge that much. Yes, you can, because the government wants their money. The accountant who told you that the government wants their money, they want their money. The people who are processing the payments of the things you sell, they want their money. And so you have to take all that into account, and the wonderful nature of the fact that you made this thing, you created this thing, or you provided this service. All of that has to get put in the pot before you can put a price tag on it. So it's important.
Pricing is a whole nother beast out there. I just will say this, as I say to everyone, every co-starters group I've ever spoken to, any classes I ever facilitated, is that do not undervalue your products and your services. Be competitive, stay competitive, understand the industry trends and pricing and things like that, because there's something about the reputation of your company that you want to make sure you are protecting, and you can do that through pricing competitively. So nothing wrong with giving a discount here and there, nothing wrong with running a promotion here and there, but come out at industry standards when you open up your business. It's unfair to you, it's unfair to the market, it's even unfair to me. You know why I say that? Because then, now there's this debate over, is this earring, this artist designs this, is typically this, or right. Is it this, right? And it's hard to say what that value is. Yeah. In accounting, there's industry standards. You can just about across the board know what bookkeeping is going to cost you per hour, right? So if someone comes up to you and tells you, oh, I could do that for $25 an hour, I really want you all to run like the opposite direction.
Be right? Like, oh, really?
Because you get what you pay for, honestly. And and to pay for that and then pay for someone to fix it, don't do that to yourselves. Don't do that to yourselves.
So to our current life, right? And I'm so grateful because again, I wanted to just make sure people kind of had that at least in this conversation, we all kind of have the same base knowledge, right? And so we talked about a little bit about kind of some of the pitfalls and the things that have happened with idle loans and grants and all this kind of stuff. There have been some updates on forgiveness of PPP loans. Now, I could not go this entire hour without bringing up current issues there have been some changes in the forgiveness of PPP loans, which quite a few people got in the second round, which I was very happy to see. A lot of people were like, hey, I finally got in there.
Yeah. And there's still PPP money out there.
There is still, which is crazy that we went from stressed for it being short to like, y'all, please come get this money.
Please come get this money.
Yeah. We begged, we got the money, please come get it.
Right.
And so it's so crazy how that's just kind of how life has been. It's like one week it's all good, the next week it's craziness. That's life right now. But my question to you would be, when it comes to forgiveness, it started off being if 75%, I think, of your expenses were payroll, then it could be forgivable payroll, utilities. There are a couple other things in there, rent or mortgage, that kind of thing. What has changed? Anything you can tell us? What do you know?
So let me tell you where we are today. So when you talk about, my work in policy and things like that. So where we are today is that in the House, this has passed. So we are now waiting for Congress to pass the proposed changes. So I would say that we are 95% there. But of course, we're still operating on what we know to be the current guidelines. But let me just address what the proposed changes are likely to be. And that is we will go from 8 weeks to 16 weeks. 16, 24, 16. And for the use of the funds, we will go from initially, it was 2 years repayment for any part of it that was not forgivable. We are looking to extend that 3 to 5 years. And we have, everything that we're hearing from business owners is saying that is a big, big plus. 3 to 5 years for the repayment of that. And also looking to shift the split from the 75-25, so 75 originally being for the use of payroll, 25% originally being for the use of other, and other included utilities, rent, not the mortgage itself, but the interest if you have a mortgage on a building, insurance, those were considered the forgivables, right? So we're trying to go now to a 60-40 split, 60% being used for payroll, 40% being used for other, but loosening those belt loops on what can be used in terms of operating expenses for the business. Really, not limiting our businesses to just utilities, rent, and insurance, and be able to pay for other expenses that they have on a monthly basis. So that's the main parts of the proposal. We are hoping to really see some language on that by the end of this week, and definitely by the first of next week. So be on the lookout for that. But yeah, it's going to be a game changer for businesses.
Because, when they started considering independent contractors, it's like, hey guys, I may have, and I think about myself because, I definitely can't speak for anyone else, but I know even with a lot of, creators and musicians, a lot of those overhead costs, maybe you don't have a building, maybe you aren't paying rent, that's just the case, but you were in business and you were, generating revenue. That's how you're paying your bills. And so it began to be, and I think this is where a lot of people were hesitant even to apply, because they're like, well, that sounds a little more heavy duty than my business is. And when it comes to paying it back, I would love for it to be forgivable there, but there's no way I'm going to be able to tell you I spent 75% on a payroll I don't even have, or even 75% just on paying myself, because basically that means that I'm going to pocket the money. And I know you asked to see how much money I was paying myself beforehand, and there's no way those two things are going to add up. And so having that being loosened some and having more time to spend it definitely helps a lot of us people who don't have payroll. Let me just say that, who don't have payroll.
Or you have to remember, what we were stressing to the policymakers, and so what we were saying to them is, it has to align. If you're saying that the average that this business received for this PPP is based on 2019, so technically we've had this huge shift in how we're doing business in 2020. And a lot of it is not because you didn't want to do business, but if you were
Right.
deemed non-essential, the revenue wasn't coming in. The people were not working. You had people who did not want to work during that time and for various reasons, right? And so therefore you've got to give businesses time to ramp back up and really use that money for payroll. Like,
Right.
give them a chance to really do what they need to do during that ramp up phase of the business. And that's what we were saying. And that's not happening in this 8-week period.
No.
We were sheltering in place during that time.
And some people still are. Like some people are still, I'm still at home because
Right.
my
And I
child
have,
is not going back to daycare. So I'm still at home. I still have to be here.
right.
And I think that's such a good point because 8 weeks is like, y'all, in 8 weeks, I'm gonna just owe you money because there's no way I'm
Or I
spending it.
haven't even spent it. I'll just be giving it back
I'll
to
just be
you.
giving it back so that I won't have to pay you
Yeah.
interest, which their interest, just so y'all know, interest does accrue during the time that you don't have to pay. Just want to put that out there. But yeah, and I think again, it comes into this tug of war of I'm not big enough, right? I'm not doing enough. And a lot of people who are independent contractors or who are makers and stuff like that, I think they saw themselves being left out. Even some organizations felt like I'm not a big enough organization for this. I don't need this amount of money for payroll or whatever the case is. And so I think that those proposed changes are going to be a serious game changer for our small businesses, especially my friends, like all the people I know will be happy to hear all of that become
Well,
law.
I agree, and I would encourage anybody who has not received the PPP, who is an independent contractor, and you have gotten your 2019 tax returns prepared, please apply for the PPP. Please do that for yourself. Don't feel that you need to be limited because you don't have an employee, because an independent contractor, it's just saying at minimum 75% had to be spent on payroll. But at the end of the day, your payroll is you. And that's what you're getting the PPP based on. So if you're used to making an average of $3,000 a month, $5,000 a month, whatever that number is, then you're going to pay yourself that amount. I mean, that's okay. Don't feel guilty about any of
Let's
it.
put a pin there and talk about people paying themselves. Let's just put a
Yeah.
pin right there. A lot of small businesses, and I know that we kind of like, if you all have questions about PPP things and accounting things, that's great, but I don't want to miss the opportunity to point out that this help is for people who pay themselves. You should be paying yourself. How often do you see businesses often not like paying the owner or not paying themselves? How often does that happen?
Well, it's such an interesting question, because most often that's really not the case.
Really?
So, but what happens with small business owners is that they use their business money for personal use.
Mm,
Okay. So think about it like this. If you swipe your card for a $50 item that goes to your house, technically that's your payroll.
right.
You've just paid yourself $50, and you use that $50 for something personal. It is not a business expense. So that's why when we as accountants and bookkeepers get all these receipts that have all these personal items on there, you will see this category that says owner's draw, because then that means that you took money from your business to pay to for a personal reason. And that is considered your pay, which means you then have to pay taxes on the money that you took directly from your business. So I just encourage you all to go ahead on and set up some type of schedule that transfers funds from your business account into your personal account, and you can better keep track of that. It just kind of helps you to better really keep track of what you are taking out of the business so that you really can get on some type of a schedule. There's no frequency that has to, no law and order to that. Once a month, twice a month, If you want to do it by invoice when when you get paid, if if you say 25% of every invoice is my income, whatever that process is going to be, just create one and stick to it. That's how you're going to be able to better understand how much money your business is making and how much money you can make out of your business.
Yeah, and that has even proven to be helpful with stuff like PPP loans, because you don't want to have to go and add up all the stuff you swiped at Target. I'm talking about myself, y'all. You don't want to have to go and be like, oh yeah, let me add up this, and okay, I got gas that day and I got whatever. Just pay yourself.
Well, that's why they're asking for the 2019 Schedule C, because the 2019 Schedule C, whatever's on that Schedule C that says net income, that's yours. And so they take that amount, they divide it by 12, they take that amount and multiply it by 2.5. That's your average monthly income.
Y'all got that equation? Did y'all get those numbers? Okay. All right, so that's all the questions that I have. We have about 9 minutes, and we do have the Q&A box starting to light up here. So let's find out. So we have a question that asks, sole proprietors can't take a salary, but can take a draw. What are the different payroll tax implications?
So a draw is simply paying SE taxes. So you pay self-employment taxes at year end. You are responsible for all of your Social Security and all of your Medicare through your SE taxes. So that's really the difference there. In terms of a company that takes salary from their entity, the company pays technically again 50% of Social Security, 50% of Medicare, and then the employee pays the other 50% of Medicare and Social Security. There's no SE taxes at year end. That's self-employment taxes. There's no self-employment taxes at year end. However, it is still a pass-through entity. And so therefore any net loss and or gain is taxed at ordinary income.
Yeah. So, and this, I think that, when people consider the idea of putting themselves on payroll, and I think that maybe because a lot of people, I know a few people who are consultants and are like, oh, I'm going to put myself on payroll. Like, how does that help anyone to say I'm going to pay myself via payroll? Like, what are the pros?
So when you talk about payroll, let me just say from a tax filing perspective, there are some tax filings that you're required to be. You don't have a choice. So if you're an entity and you make an S election, you can be an LLC, make an S election. That means becoming an S corporation. As an S corporation, you do not have a choice any longer. You must become an employee of your entity and take a payroll. And they say that payroll must be reasonable in its nature for the work that you do for the company. So whatever that may be, right?
Whatever that is. Yeah.
But at the end of the day, you are required. But if you're a partnership, a Form 1065, that is another entity that also cannot be on W-2. Schedule C cannot be on W-2. You cannot be an employee of your entity and file a Schedule C, or an employee of your entity and file a Form 1065. S Corps and C Corps, you must be employees and you have to follow W-2.
Gotcha. Any other questions? And I'm looking at the Facebook comments here as they pop in. A lot of yeses and guilty here, and people who are just basically Wi-Fi-ing us all through the conversation. Are there any other questions out there that you all may have for Darlene as we give you a moment? I sometimes feel like, when we get into business service stuff, especially things like we had a lawyer a couple of weeks ago, and then now with you, it can be so overwhelming. It can be so overwhelming. And it's one of those things where you're afraid that if you go one way or the other way, you're gonna make the wrong decision, and then you have to pay for that decision, especially when it comes to accounting. But this is, back to our original point, why you should talk to someone and talk about what your plans are for your business, or once you realize, hey, I've gotten so far, what are my new plans?
Yeah. And I encourage you all to talk to to experts. Like, I encourage you to talk to people who really know the industry. I think there's nothing, certainly there's nothing wrong with having a friend in business and knowing somebody that is in business, but there are no two businesses that are alike. Okay. So when you talk about going out and seeking advice, I can't tell you how often we get the, well, my friend said they do, or they say they don't have to do, a W-2, or they file an S corp and they don't ever take a payroll from their business. Well, they may not, but that doesn't mean that that's the right way to operate. That doesn't mean that they are in compliance just because they don't do it, right? So trust the experts out there, follow their lead on those things. I think if you start off right from the very beginning, you just have so fewer issues down the road. Because if you are really working that business is sure to grow. That business is sure to really make some money, and you're going to have to be implementing new processes, hiring people, all of this kind of good stuff, right? And maybe that's not the type of business that you want to be individually, but there's still compliance, even if you want to be just a solopreneur, mompreneur, all of these wonderful, great terms that we have out here for people who just operate as a single entity business. There's still compliance that you must meet as a sole proprietor. So getting good advice out there is really helpful to you. Unfortunately, your beautician is just not going to have all the answers. And your buddy who works at Alabama Power, who's never, ever run a business ever before, he's not going to have all the answers either. We like them.
Yeah, I know. They sound like they know what they're talking about.
Yeah. But I cringe some days, and I have to just hold back some days and say, they didn't ask your opinion, they didn't ask for your advice. Shut up, let these people talk. I don't want to say that.
Like, that's not right though, but y'all go ahead. Y'all go ahead. So as we have a question that just popped up here. Here we go. For budgeting purposes, what is the general range of the cost to set up books for a new business, monthly bookkeeping, and annual tax prep? I know this can't be specific because each business is unique, but is there a general range I can use to plan?
Call who you want to work with, and they will give you a budget, give you an amount, and that way you can see if it fits within in your budget, because there's no way to just quote a price. A typical, just a very average Schedule C tax return for a small business, I would say would probably cost you at minimum, just tax preparation alone annually is probably $500.
It's so, accounting is just one of those things where like, it's just so hard. It's just, you have to like look at the exact.
And you don't want an accountant or a service that just kind of box you in. This is $99. This is $50. This is, you want people to really price their services based on what your individual needs are, so that, it does meet and fit within your budget, because you may not be big enough to be, to get charged $1,500 for a tax preparation fee, Right. And that there is somebody out there who's going to price it based on the time that it takes them to prepare your taxes. And let me say this, tax preparation and bookkeeping are two totally different things. If you bring your receipts in a shoebox and in a plastic bag to us at year end, that is bookkeeping. And we have to do the bookkeeping first before we can prepare an income tax return. So you can save yourself a lot of money sorting your own receipts.
Tips and tricks here. You heard it here first. Darlene, how to save money at your tax preparation. But I think it's good to the answer of like, tell someone about your business or give them some ideas so that they better understand what you might need to give you kind of a range or a cost. Because then of course, if you say something or you hear something, you plan according to that, and then you find out it's twice as much. Then it's like, it didn't make any sense to get that information in the first place. So it's good to kind of I guess not necessarily not answer the question, but also to just advise, hey, call someone and say, this is what I do. Can you give me an idea? So with that in mind, we are at 3 o'clock and you all know how I honor your time. I do want to ask, this is my last question to you, Ms. Darlene, as we face mounting issues in our country, and as small businesses and as people who are running small businesses, when we think about our accounting, when we think about all the PPP craziness, again, don't everybody out there, don't forget to go get that PPP money. It's waiting on you. But as we deal with that, what do you say to entrepreneurs, small business owners, organizations, makers, creatives, anyone who is working for themselves in some respect? What do you say to them about weathering these changes financially as we go through what I hope is a much quieter 2020 in the second half than it has been, because 2020 has been a whole fool. And so what is your just kind of final statement to everyone about that?
First and foremost, don't be too hard on yourself, right? During these times that are uncertain for all of us. So none of us are immune from what is going on right now. I ask that you lean in on others' expertise and advice at this time. You would be surprised at who is really willing to help out there, who is sharing information like Create Birmingham and entities like such that are giving countless amounts of information out there to help anchor and support businesses. I ask that each of you, if you didn't have a plan prior to 2020, now is a great time for you to develop a plan for your business. Now is a great time to develop a growth strategy plan. Be okay with shifting. Be okay with making some adjustments, and be okay with simply pivoting if that's exactly what you need to do at this time, right? Feel a need. There's lots of needs out there still. There are lots of voids out there. Consider what gaps are out there that your entity can fill at this time. Be creative. That's the word that Jackie keeps using, the creatives of the world. Y'all are the most creative people out there, and it's why we have a lot of the resources that we have today and access to the things we have today, because it's your minds that's sitting back there behind the scenes doing the things that this accountant doesn't do, okay? So use your expertise wisely right now. Collaborate with each other, right? I tell people what's going to happen as a result of this are people who will rise better, stronger out of this, are people who have come together, collaborated, put their resources together, joined in together. That's what they do.
Yeah. Well, thank you so very, very much. Before we go, how can people get in contact with RAM Firm?
www.ramfirm.com, www.ramfirm.com. hello@ramfirm.com. hello@ramfirm.com. We look forward to hearing from you all. Have a wonderful afternoon.
Thank you so much for being here and spending this time with us. And to all of you who are watching, thank you again for joining us. We really, really appreciate you being here and asking your questions and just seeking to understand better how you navigate these times or just navigate business in general. So thank you all. I hope you all have a wonderful, wonderful day.
Yeah, good.